Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, November 13th, the year 2019. Let's talk trading. First, principles trading, part 6. A trader asked me to elaborate on trading your way out of a mess, out of a loss. Um, those of you who've been following me, or I don't know, following me, reading what I produce or watching my videos, may remember probably years ago, I equated trading like riding an elevator. If you were in a skyscraper and you were on the 50th floor and you wanted to go up to the 90th floor and you got on the elevator and the next thing you know, you're on the 49th floor, would you exit the elevator or would you continue to ride it down? I mean, I think the choice is pretty obvious, right? But somehow when we start trading or we're trading, the obvious isn't always so apparent. Now, the problem is how we view losses, how we internalize it, how we react to it, and the emotions surrounding it. So when you get on that elevator and you're on floor 50 and you want to go to floor 90, but you see yourself on floor 49, you don't beat yourself up too bad. You just exit the elevator, wait for the next elevator to go your way, and then you get on the elevator, right? But you see, in trading, maybe we're down 5 or 10 pips and we're mad, we're upset because of how we're internalizing it. The trade didn't go the way we wanted it to go. We wanted it to go up and the market went down. And for us to exit that, it's a blow to the ego. Oh, we were wrong. But if you just exit that trade and then maybe you wait for price to come back, or maybe you see that same setup appear maybe 20 pips lower. Well, if you've only, taken off 10 pips and then you see the same setup appear 20 pips lower, and then maybe you get back on that trade or back on that elevator, you can see it starts to go in your direction and you more than make up that initial quote unquote loss. So, yes, riding an elevator and trading are definitely two different things. When you get in the elevator, you go the wrong way, yeah, you maybe spent some time there, but overall, it probably really didn't affect any outcomes. Now, of course, if you were getting on the elevator on the 50th floor and you want to go to the first floor and you wound up on the 51st floor, maybe you missed your bus, your cab. Maybe it's going to delay you, and that does have some consequences. So you just have to put everything into perspective, and that's probably the main point here. Yeah, depending on the perspective is going to depend on your reaction, and then that's going to change your action. So just think about that when you're trading. So a first principle would be that taking a loss isn't the end of the world. It doesn't really mean anything per se, so long as that loss is within your risk and money management parameters. So long as you're not losing more than you're willing to lose on a particular trade, just take it in stride. And I think I mentioned yesterday, you don't always have to let price run to your stop loss. You can cut it off soon, because maybe your stop loss is 50 pips away. You're trading really small and you see it's going the wrong way. It's going opposite. You know, your account's going down. You could cut that and get back in possibly at a better price, or you could stop and just reverse. So what do we have here? Looking at the daily chart, you can see once again, price broke out of the previous day's low right here. And you can see this, you know, there's more wick than body here. You know, here there's more body than wick, more body than wick, more body than wick, more wick than body. So you can see that the here, you know, the buyers and the sellers were, you know, pretty much duking it out, but you can see the length of this wick versus the length of this wick is kind of saying, you know what, price probably going to go down here. But you see here, this wick's longer, so price is probably going to go up. But then again, it came back down. But it's just something that, you know, a little something to look at where you might be able to take a slight bias, just a slight one. But it's just one of those things when you're observing the chart, you can, you know, see these things, and sometimes they work out and sometimes they don't. But, you know, that's trading. But back to what that trader was asking me. If you look here, if you're familiar with the highest open, lowest open that I talk about, here's H1 chart. So we had an H1 lowest open here. So if you played that, there was a potential to make profit. Of course, if you were trying to target something up here, well then right now you might be experiencing a drawdown. But once again, you've got a bullish candle close here. You see it made a higher high, came down in the wick zone and exited. So if you entered here, this is probably the least amount of profit you should have, and I would think you'd want to target about right there. You know, of course, it could have come down, hit that, and then gone all the way back up, and you'd be kicking yourself, but that's hindsight. And I guess we should probably add that to a first principle. Hindsight, don't do it. Don't second guess yourself. Just don't look back. It's you made your decision at the time, and what happened next was outside of your control. When you enter the trade, what happens next is outside of your control. When you exit the trade, what happens next is still outside your control. So just remember, focus on what you can control. So here, if we went in on a lowest open trade, there was pips to be made. And if you gave them back, that's on you. Once again, here, if you went in on the lowest open trade, right here, there's pips to be made. And if you gave them back, that's on you. It's not so much that you've done anything wrong. It's just this is the market. So, you know, in this, actually, what I should probably do here, it doesn't, I don't think it matters which one. Where was it? Shade previous day. Let's shade that with a light color. That didn't turn up. I won't worry about it. Actually, what I can do, though, we can go to properties, show period separators. Now we've got the previous day here. So this is all today. And you can see what price did right here. So, you know, something here, it exited the previous day's low once, twice, came back up, and then Once again, just crisscrossing across that previous day's low. But as I was saying here, if you were trading the lowest open trades, you had opportunities to make profit even though price is going down. There was opportunities, and sooner or later you're going to catch the big one. Of course, it could go up to be plus 10. You move your break even up to plus 1, or maybe you take half off at 5, then it comes back down, hits your stop, and then goes to the moon. That is possible. But once again, it's outside your control. That's why I tell people you have to trade what you see. Okay, so let's blast through these charts. We still have 3 pairs that haven't filled. You can see we hit the weekly midpoint, previous week's midpoint coming back down. We are now 89 pips below the yearly open. Seems like it's a struggle. Now, here's that first day of the week. And here's the first day of the week low, and you can see here we're now 14 pips below it, taking that breakout. Now, remember, this would be a wick zone for the previous day, but it's still a wick zone. It's just that it's 2 days ago. So those of you who doubt the wick zone, don't trade it. The opens on the days, you can see here we went through the February, approaching the August. First trading day of the month. In the ranges, you can see here we're below the August 1st high. And here's the August 1st low way down here. Obviously, it was a big range that day. Inside bar traders, you can see here we went inside that range here from 3 days ago, broke out, and there's 32 pips to the good. So inside bar traders, it's paying off for you. But remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And that trading is very risky. You can lose all your money. That being said, seek your financial advice from an accredited financial professional. That way, when your money is lost because you took their advice or let them manage your money, you know it was lost by an accredited financial professional rather than because you listened to somebody you found on YouTube or some other internet resource. And for those of you trading inside bars, we just entered the weekly inside bar. We're 2 pips into it. So you might want to trade the reversal out. And you can see here we had some New Zealand news, and you can see obviously we've got 4 pairs over 100, and they're all New Zealand pairs. Yen making a new daily low as we speak. And there's the weekly H1 lowest open right there. Might want to trade that. Get ready to trade at the top of the hour, another trade. Okay, we hit the pivot point. But the pivot point was inside the buy zone. No real bias, but we opened below the weekly open, so that put a negative spin on everything. So coming back through that daily open, that would have been a nice time to short, and you'd be up. It's not hindsight. And range, actually rat traders on the dollar yen, we haven't had a good rat trade for about a week now. You can just play around here, but only look for a handful of pips. We've already seen the pivot taken out. We took out a missed, we'll see, we took out that pivot today, took out that pivot. That was a missed pivot, but we're heading back towards this missed pivot. Price action. Once again, price doesn't like staying between the lines. Wick zone, there's big wick zones, but still in and out. Price doesn't like staying in the wick zone. Oh, I know there was one thing a trader asked me to do. So let me do it real quickly here. They wanted to see the indicator list. There you have it. Okay, that's it for today, fellow traders. Just remember, it's not what you trade, it's how you trade it. Drain the banks.